Tesla has time and again reinvented itself and the auto industry along with it. But its biggest reinvention could be just around the corner. Let me explain. Tesla just announced its Q2 earnings report. It comes at a time when many investors on Wall Street have been yet again preaching that the stock is overvalued. Along with the media calling out CEO Elon Musk as having too many commitments, it was not clear what to expect. Let's get into what Tesla reported, how Tesla plans to reinvent itself, and what it means for you. Firstly, Tesla reported record deliveries and revenue for the second quarter, but investors are biting their nails about the firm's future profitability. Tesla had previously let slip on its car deliveries for the last quarter, which was a record 466,000. So the suspense was all about the profitability of those impressive sales. And given that Tesla's been slashing prices and selling less profitable models, it wasn't a total shocker when overall margins dipped to 9.6%. That said, the auto division's gross margins were 18.2%, a smidge better than Wall Street had predicted. Since the announcement, shares dropped 4% as Elon signaled at more price cuts that gave investors the jitters. Tesla stock going forward. Tesla's shares have already rocketed up 130% this year, so the firm needed miracle results for its stock to surge even higher. And while it didn't quite hit that mark, don't forget that Tesla smashed its 50% year-on-year delivery growth target and continued to grow market share, despite the increasing amount of competitive EVs entering the market. Against that backdrop, the 4% stock dip isn't exactly a red flag. Musk's told investors he's not sweating about profit margins in the short term. His focus is shipping as many cars as possible, even if that means trimming prices. He's banking on Tesla drivers shelling out for pricey self-driving software when it's ready to roll because those huge software margins will balance out any price cuts, hopefully boosting the firm's overall profitability. But that depends on consumers being ready to lean back and let their cars do the driving, and I am not sure the market is ready just yet. Tesla is apparently already in talks to license its full self-driving software and technology to another automaker. This is a new and interesting revenue stream for the company, putting Tesla in prime position to capitalize on the software it's been meticulously building for years. This move could transform the auto industry from making cars to who can make the best software. Yet again, it seems Elon had planned for this all along, and it's only just starting to bear its fruit. What does this mean for you? So how will this impact you, whether you have Tesla stock or intend to buy some in the coming months? Most interestingly is the software side of the company. Licensing its full self-driving technology will give the company a massive revenue and profit boost, which could send the stock soaring when announced. This follows on from the recent string of deals to license its supercharger network to rival EV makers. Business Insider believes that this move means there is no reason to buy any other EV right now, as the charging technology on board current models will soon be out of date. From Wall Street's perspective, JP Morgan has reaffirmed its sell rating on Tesla stock with a price target of $120. However, individual investors and avid Tesla fans think otherwise, with many citing this as a mistake from the global asset manager. I believe that Tesla is likely to increase its profit margins over the next 12 months thanks to licensing the supercharger network and possibility of doing the same for its self-driving technology. If this happens, I believe its stock will go even higher. So, I'll be holding on to the shares that I currently have. Let me know what you will be doing in the comments below. Has this earnings call and slight dip in price given you the push to consider investing in the electric vehicle manufacturer, or are you holding firm with JP Morgan's view? Thank you for watching until the end. Click on screen to find out if your portfolio is ready for the next $3 trillion boom in the US.